What you see is as the vaults go to zero, they start rating the other stuff. When that's gone at the current prices, then silver should have a minor explosion. Good afternoon, I'm Vince Lanci, and this is the Arcadia Economics Silver Fix. I'm recording this at 10:03 a.m. Monday morning. You'll be seeing this around 1 p.m. Good afternoon to all of you. The topics we'll be discussing very briefly today are CitiBank has a new silver report came out this morning, so you're at the bleeding edge of this stuff, right? Let's quickly talk about scrap destocking, banking roles in destocking, just a quick editorial comment there. Central banking's role in the return of real money and how that will affect gold first, and then silver. But the idea behind that is to give you an idea of how to interpret what you're going to start seeing in the news coming out of central bankers' mouths. And then some quick observations from London by RBC on miners. Let's get going. Starting with the Citi report. They're not big fans of putting their reports out. So I have some excerpts for Goldfix people. Incidentally, if you were to sign up, you'll get 30% off for Goldfix because of the Arcadia Economics relationship. All right, commodity flows. Let's start with the ETF part. November gold ETF redemptions are trending at the slowest pace since May, despite weak year-end seasonals. Easing U.S. inflation and loosening labor markets create a favorable environment for the yellow metal heading into 2024. I will say this, ETF redemptions have slowed off, but they have been big for the last 6 months or so. I believe that we're in buy season, so you're not going to see people liquidating silver this time of year, if at all. Silver ETF outflows have accelerated month over month despite a collapse in the gold-silver price ratio to pre-Israel-Hamas war levels, suggesting pent-up demand might arrive in the coming weeks. Okay, that's an interesting statement, and I just want to frame it a little bit. Silver ETF outflows have accelerated month over month. So what they're saying is domestically in the U.S., you're seeing a disinvestment in silver, and meanwhile, you're not seeing a disinvestment in gold. This is also consistent with what we're seeing in the CTA marketplace, where people are buying gold for war risk and shorting silver for economic risk. It's kind of I want the precious aspect of precious metals, not the base aspect. So they're all not just shorting silver or liquidating silver. They're selling copper, they're selling aluminum, what have you. But that's because of what I just described. You're not going to see that anywhere else. But what I'm telling you is it's true. Okay, so both precious metals seem poised to rally in Q1 with higher developed market recession odds favoring gold, but an emerging market rebound supporting silver. For the week ending November 14th, commodity index, blah, 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 blah. Okay, you can see the numbers there. What does that sentence mean? It means that they're saying that there's a potential macroeconomic Goldilocks going on for precious metals. Developed markets are headed into recession, so that implies easing, and that implies gold will have less pressure on it. We're not worried about inflation. It's a good explanation. And the other part of it is in emerging markets, silver will have, which is a bigger exporter of silver, a bigger producer of silver. They seem to be rebounding economically. I look at these two things as the same thing, meaning we're headed into recession. The emerging markets are coming out of recession. We're going to be easing rates. And so the catch-up comes like that. So silver leads and gold follows on the way out of recession. And that's how you look at these things together. Okay, translation silver is being shorted by, this is me. Translation silver is being shorted by small funds buying the economy card still, which I just said, buying gold, selling silver. Shanghai buys again on a weaker dollar. They are, excuse my French there, that's little notes to myself. The buying is coming out of China. Consider China an emerging market. So if silver is being bought by China, while the US CTAs are selling, then you have a recipe for a slingshot higher, provided the emerging markets continue re-emerging. All right, next section, global stock destock is nearing critical levels. Okay, Bai Xiaojun, someone I've collaborated on, my counterpart, we'll just call him in China, mainland China, has noted that about 50% of silver is associated with lead and zinc. That's because silver is a waste product of mining lead and zinc. And I say that ironically, right? To cope with a supply of silver or lack of supply of silver, this is lost in translation here, Chinese businesses, which account for nearly 48% of global lead and zinc production capacity, have worked day and night reaching the limit. So what does that mean? That means that they are expediting, they are accelerating, they're destocking, I'm sorry, not destocking, they're heap leaching and other methods for pulling silver out of their zinc and lead mine waste. Waste is the wrong word, but it is what it is. It's like we pull the lead and zinc out, we have a pile there, we throw some acid on it, and we in a heap, and we suck the acid out using an acid, suck the silver out using an acid. It's kind of like that. I'm simplifying it, right? All right. So if we do have a recession, you're going to hear if there's less demand for lead and zinc in the developed world. I'm just giving you like an outlier here. If there's less demand in lead and zinc in the developed world, now in this case you got to put China in the developed world in that sense, then there's going to be less production. If there's less production, there's less waste product, less silver available. Now, how important is this waste product? Well, 50% of it, okay? That's why silver is artificially depressed. One of the reasons. The economic reason is that if you're a lead and zinc miner, to simplify it, you pull it out of the ground, you pull the lead and zinc out, and then you say, what's this? And then you throw some acid on it, say, oh, look at that silver, and you hit the bid. And that's one of the reasons. A crucial supply source for silver is base metals. That's just a fact. And the reason this becomes more important is I want you to look at the silver that comes out of the base metal piles as a storage. As the world's vaults are filled with silver, right? They take the silver out. And as the world's vaults drop down, this is why I keep saying it's a flow trade. It's not a stock trade anymore. At least you can't see the stock. As the stock depletes, they start going to sources for it. In Latin America, they're not hedging silver anymore. Why? Because they're selling it out of the ground directly to China in concentrated ore form. Boom. All right. So you're not going to see that hit the vault, or it'll hit the vault, be tested, and be shipped. Simultaneously, what you have is countries like China and the US, I'm sure, are going to their banking pals, JP Morgan, Bank of America, and saying, you know what, we need more silver. Can you secure us a new supply chain? Remember, post-COVID, we have supply chain issues. So the banks go, sure. And they go to their clients that are lead and zinc miners. And they say, hey, you got any piles there? Yeah, well, pull it out. We're going to pay you for the silver. And that's what's happening. You're seeing the above ground silverware, your grandmother's candelabras, the silverware that's in your store being raided by the banks. And it happens to be piles of lead and zinc ore. Okay. So what you see is as the vaults go to zero, right? They're not going to go to zero, but as they get close to zero, they start raiding the other stuff. And then when that's gone, when that's gone at the current prices, then silver should have a minor explosion. Now, I don't know when this is, but that's how it works. And then we hit another level, call it 35, call it $50. And then more scrap comes out because it gets more expensive to pull the scrap out of other earths, but they start to do it. So you'll start to see scrap pulled out of, to simplify, you're pulling scrap out of phones, that type of stuff. But it's not cheap, so it doesn't get done overnight. Silver has to hit a level for this supply to come out. And it's going to hit one of these levels very soon because the vaults are empty. They're tapping into the above ground scrap. Crowded trade. That's why I call it a crowded trade. Heap leaching makes silver cheap. I just described that. Waste product reliance as a piggy bank has already been rated. What I mean by that is I think when the less savvy firms say, oh, we'll just go to the Joe's lead and zinc mining and we'll buy his silver, it's going to be gone. That piggy bank's already been raided. JP Morgan, Bank of America, Standard Chartered, they're all over that shit. China is buying everything. Turkey is buying now. Well, they were buying before, but Turkey is buying. And India, right? India, surprising for me anyway, they ramped up their buying again. And I really, it's speculation, but I think they're buying some for Russia as well. I can't tell. But let's just look at it this way. Indian demand, which bought last year in the $18 area, let's call it, right? They bought in the $18 area and should not be buying this year, at least not at these prices, is buying again this year. That's very encouraging. All right, City on Platinum, we can talk about that some other time. Central bank rolls. Two reports I'm rereading today. This is primarily about gold, but they're precious metals, right? Look at the dates on these reports. March 2022, the stealth erosion of dollar dominance, and January 23, gold is the international reserve of barbers fraud no more. These are central banks preparing their world. IMF is primarily European, although it governs, the earth in some way, preparing their people for the remonetization of gold. Now, how does that affect silver? Well, the less above ground available gold for investment there is, the more desirable silver becomes. Please understand that silver is an industrial metal now, and it's increasingly industrial, which means, and I'm not joking here, in the future, you're going to see silver become more and more utilized, even though it's going to get more expensive, because they're going to figure out ways to apply thinner layers of it, use less of it. But by using less of it, you can apply it for more things. So the cost per unit of silver goes down to $1 from $5, but the use expands for the masses. And silver becomes more and more and more industrial. You can't use copper in missiles. You have to use silver because you can't have any delay in electricity, things like that. Well, what's going to happen is there's going to be less above ground silver available for investment, which is just going to make silver like gold. You're going to see, I believe you're going to see over time, gold gets remonetized, then gold's price will be more proportionate with how much gold is in earth. And if gold gets remonetized and there's less silver available to be used, then you're going to see the ratio converge, 15-1, whatever it is. But it's certainly not going to be 90-1. That's for sure. All right, so that's one of the reasons I'm looking at all this here. Oh, notes from London, and then we'll wrap it up. Another report that just came out this morning, and this is on mining. The London Precious Metals Conference is going on November 14th. It was hosted by RBC. Very nice, comprehensive report here discussing the key issues with roundtables of some of the people that are very respected in the industry. Depleting asset base, the argument for and against M&A, current market conditions favor buyers, high quality assets are expected to spark greater interest, and deals for these opportunities were less likely. You have to read these. I can't just say. On non-precious metals opportunities, you're going to see gold and copper miners combine more. You're going to see a horizontal integration. If you mine gold and you mine copper, you're going to appreciate, your shareholders are going to get better return on their buck. That's it. Quick reminder. Anyone who is a Arcadia Economics friend and SilverFix viewer, they're going to be able to subscribe to GoldFix for 30% off for life. And Thanksgiving is coming up. American Thanksgiving is coming up. Please have a great Thanksgiving. By the way, I'm looking at myself here, and I want to comment, if it's not obvious to all of you, how old I am now. Okay, so I have these glasses, right? These readers, right? 1.5. I'm not that blind, right? And see, this one's broken here. Well, these are the glasses that I used, and I ordered them. And they sent me these with these yellow lenses in them. And I'm thinking, you know what? I look like the old lady, the old guy on the street with those yellow glasses that they can't get around. They have these things because they just had eye surgery or something. Anyway, I am, for all intents and purposes, your grandfather now. So it's probably about 1:15 your time. Have a great rest of the day and enjoy the holiday. See you soon.